My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Awaken America. I'll be one of my friends. I'm just trying to keep you from losing a lot of money. My job is not just to entertain, but to educate, teach, put this thing into context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Sometimes it's just a confluence of small things. A few negatives here, a couple of oddities there, throw in some history, and you start to get a little perturbed. Suddenly, the idea of taking something off the table makes some sense, which is how you got to today's sell-off, with the Dow plunging 710 points, S&P plummeting 2.59%, Nasdaq nosediving 2.19%. This was a recognition that the bull camp and the bear camp, which I've been telling you about, can't exist at the same time. There cannot be coexistence. And with the huge COVID outbreak in the Sun Belt spiraling out of control, bears in charge. So why don't we do this? Let's suspend judgment, not use any terms about good or bad or anything, and just take a dragnet approach, just the facts, man. What are the new facts? First, the Awaken America trade has taken a turn for the worse. Now, some people expected that. I didn't. All right? It's a disturbing spike in COVID cases across Alabama, Arizona, North Carolina, South Carolina, and Texas. The infection level so high that the governors of New Jersey, New York, and Connecticut have taken an unusual action, no, highly unusual action, and slapped a 14-day quarantine on travelers from these hot spots. That's really pretty amazing. Nationwide, we had more than 35,000 new cases today, which is about where these numbers peaked in April. Not good. It's just plain bad news for everything. It depends on the economy reopening, which is a lot of things. If the Awaken America trade is losing, that means the stay-at-home trade is winning. But the stay-at-home stocks have already had huge runs to the point where they've reached nosebleed territory. The Nasdaq just had its biggest rally since the fourth quarter of 1999, the last full quarter before the dotcom bubble burst. As someone who traded through that period, I never want to hear anything that sounds even remotely like Q4 1999, where the high flyers exploded to insane levels in a series of parabolic moves, only to crash a few months later. Now, as David Faber, my partner at First Squawk on the Street, pointed out and reminded me, the prices we saw back then in 99 were absurd given the lack of earnings or even sales at some of these companies. Today, the tech, which is the leader, is very different. I mean, look at the big five, which, by the way, my travel trust owns every single one of these. Alphabet, Amazon, Apple, Facebook, and Microsoft. They're all immensely profitable. They all have great growth. Rather than plummeting, I expect these stocks to right themselves. That's how I look at it. Right themselves pretty soon. And I wouldn't count out the Zooms or the Oktas or the Ring Centrals, the Twilios, the Etsy's, the Wixes either. They're going to bounce back. They have too much growth not to. But coming into the session, these stocks had 8 straight days of rallies. That's unnatural. When you get that kind of move, it always brings in sellers, and that's because people start thinking that they're parabolic. A parabola is something that goes like this, okay? And parabolas don't last. They just don't. Now, in the past, every one of these big sell-offs has brought in new buyers for these stocks, and I think it'll probably happen again. Last night, we highlighted some work from Larry Williams, who demonstrated that buying stocks in the 2 days before the July 4th holiday was remarkable. A terrific trade, okay? But when we get sellers today, the buyers did not feel emboldened. And, of course, I do worry about what happens right here after this. Now, why? It's because I'm going on vacation for the first time this year, and every vacation is always ruined by a sell-off. So just take that. I know that's kind of like saying, well, when I see certain signs in my head. No, but Cramer goes on vacation, market crashes. Happens. Second fact, Joe Biden's campaign is looking really stronger right now than it was, okay, even though he's not doing that much campaigning that I've seen. There was a story on the front page of the New York Times, quote, Biden's war chest swells along with the polls, end quote. Hey, now Joe Biden's not Bernie Sanders, but he does want to roll back Trump's big corporate tax cut. He has said that. If we raise corporate taxes, that knocks a sizable chunk of profits off the S&P 500. If you drop the profits to the S&P 500, then theoretically stock prices should go down. Now, it's not necessarily bad policy. That's not, remember, it's just the facts, man. But it's bad for the stock market. Biden also might raise the capital gains rate on the rich, make them, say, equal to ordinary income rates. You'd expect that kind of thing to cause a rush of selling before the election. Again, not saying it's going to, but it's got to be in your head. Now, again, the election's far away. But with COVID flaring up, it's going to be much harder for things to go back to normal. How can sports come back if Southern teams aren't allowed to play New York City? I mean, you have to have the quarantine whole darn league in a single bubble. Now, we keep hearing they might do that for the NBA in Florida, but now Florida's a COVID hotspot, and most of us who follow sports very intensely are beginning to believe that none of this stuff is going to happen. What about the froth? If you eyeball the stocks that retail investors can't get enough of, the sectors jump out at you. Well, it's the airlines and the cruise lines. Now, these are the two worst sectors in the entire market in terms of balance sheets, and they're the two of the hardest hit by the pandemic. Well, that's not good. The other ones that startled me, I saw a huge number of stocks that are simply too small to talk about on this show, and they trade heavily on a key online site. Most are garbage. There are more tout boards and chart gurus around right now than I've seen in ages. Not good. Many of these penny stocks are pump and dump schemes. At least the airlines and the cruise lines are being kept alive by the Treasury and the Federal Reserve, respectively. Their bondholders should be okay, but I'm not so sure about the people who own the common stock. Come on, people. All I'm saying, buy quality. I'm begging to buy some quality. If your quality goes down, you can buy more. I got a couple more pet peeves. Gold's been soaring, historically not good for stocks. Meanwhile, after rallying for weeks, oil's now headed back down thanks to high inventories, and stocks, for some reason, like high oil. Finally, as I've told you before, lots of momentum-based mutual funds have been buying stocks aggressively every time some analyst raises their price target, even if their reasoning is repetitive. When stocks go up on the same old, you know the move isn't early. It needs a reboot. Now, I want to be clear about this confluence of negatives. They can all be potentially handled. The virus can be beaten by social distancing and masks, okay? Biden's not a sure thing. Even if he wins, he won't necessarily have the votes to raise corporate taxes. The high-flying tech stocks become more attractive as they go lower if they're the ones that are the good ones. Oil prices can rise on renewed demand. Gold can go down in supply. The purveyors of froth can and probably will be blown out. Most importantly, those stocks are the only game in town. It's awfully hard to stay in cash when it yields next to nothing. Bonds represent very little value, especially the higher quality ones. Meanwhile, the yields in some great American companies with little economic sensitivity will get very enticing as their stocks go lower. And look, the biggest companies, the ones that have led this rally, as I said, aren't all that expensive. There are too many momentum players right now, but when it comes to the big gun stocks, I bet they quickly will create some good buying opportunities. And remember, they're going to take a buying opportunity for this right here, and then the market goes down, and maybe it happens again. Which brings me to the biggest curse word of this present moment, the word sell. Last night, I recommended trimming some positions and raising some cash, as we are doing with my charitable trust, which you can go see what we're doing if you go to Actions Alert. You go to actionsalertplus.com, and you can see you'll find out here this. If you go there, you can see what I mean by trim. My comments were greeted with total contempt on Twitter, as if I were selling everything and telling you to go short. Some people treated me like a moron because when you sell, you have to pay taxes. Others acted as though I told you to abandon the entire asset class, to run. But I never said that. I never said leave the table. I said take something off the table. I want you to raise a little cash so you can put it to work buying stocks at lower levels. Whenever I hear these sirens of buy and hold, I think buy and homework. Right now, the homework on some of these stocks being bought crazily by retail investors shows suboptimal fundamentals, if any fundamentals at all. As for the tax man, okay. The only time you don't need to pay the taxes is when you have no profits. Paying capital gains, high-quality problem, especially with the low rates. The bottom line, when I am castigated for telling you to ring the register on small parts of your holdings, as I am doing with ActionAlertsPlus.com, that's when I know it really is time to worry. James in Florida. James.
Hi, Jim. Thanks for taking my call.
Of course.
My stock is Public Storage, PSA. I've been in it a long time, and I'm playing with the house's money. But with people not paying rent on storage units, it's been falling lately. Should I sell it all and buy something else?
You know what? Do you know that was one of the first stocks that bottomed after the 2007 crash? I remember the late Justin Main was telling me that was the one to buy. It is really well run. You know what? Those people are going to have to pay rent. They are. I don't want you to sell that stock. I think those people right now aren't paying rent, but they will pay rent. So let's keep PSA. I want to go to Steve in Maryland. Steve.
Jim, what's going on? Thanks for having me. I'm 24. I'm a new investor, started in March when I knew the market would crash. Got in on some good deals. This company I'm calling about has been hit a bit hard because of the pandemic. Their stores are not all open yet, but the stock has already started to climb back up from their lows. I want to know your thoughts on Ross, ticker symbol ROST. Is it a buy?
Yes, it is a buy, and I'll give you another one. Burlington is also a buy. I think Ross is terrific. It's been kind of slower of late, but you are doing 24-year-old buying Ross, which is going to take the merchandise from failed department stores and sell it. That's what I want people to do. He's not talking about buying Ross Cruise and airline company. He's talking about buying a real company. Yeah, when you get, ships and tops and all these things, just because it has 4 letters doesn't mean it can be bought. All right, today, we saw what happens when you get a confluence of negatives. I want you to do some homework of your holdings. It's okay to trim. Trimming is not a curse word. If you think it's a curse word, there's a lot of other stations. You can watch them. I mean, we can bleep out the word trim. Maybe we can do like, All right, on Mad Money tonight. Many new retail investors are trading with stars in their eyes. So I'm getting the real on the space and rankings where the most popular, getting real, where the popular retail trading stocks stay, because this is it's an issue. Then one of the nation's top grocery chains is trying to come public again. I'm telling you everything you need to know about the IPO, including why third time may actually be a charm. Plus the business of reopening. I'm going one-on-one with someone real smart. The governor wrote on. Find out about a plan, yes, a plan that spans the small state and beyond. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.